Hello, my name's David Miller, and I'm here today to report to you about Nexus Global Solutions Portfolio and Nexus Global Dynamic. It's early July. The first half of 2021 is over. Well, June was a good month for investors across the board. Dynamic, the all-equity portfolio, produced a return of 2.2%, bringing the year-to-date up to plus 7.9%. Solutions, the diversified portfolio with less exposure to equities, also produced positive numbers, plus 1.7% for the month and plus 3.7% for the year. So what's been going on? What's the news? Well, most importantly, the global economy is growing and it's happening in all regions. The companies that populate the stock markets that we invest in are profitable, mostly. That's why selection matters. They're either delivering good numbers to us, they're reorganizing to position themselves better for the new world, or they're being taken over. This is all healthy business as usual as far as I'm concerned, and long may that continue. Also important is that the worry about inflation is still there, but the intensity has diminished somewhat in the last month. And I think to an extent that was behind the rally in markets that we've seen in recent weeks. Also, the US Federal Reserve, the most powerful central bank in the world, has acknowledged that the US economy is growing, and by association the rest of the world, at a faster rate than originally anticipated. And they've indicated that they might be prepared to increase interest rates towards the end of 2022 rather than sometime in 2023. Hardly earth-shaking. And I think that explains why investors heard what the Federal Reserve had to say and reacted very calmly, with markets moving ahead after that. So that's the big news. What else is going on? Well, after an absence of quite some time, COVID is making its way up the agenda as far as investment concerns. Why is that? Well, we're reopening, and vaccination programs are carrying on at a fair rate in many parts of the world, but infection rates are also rising. So there is some residual concern that the reopening benefits that we've been seeing might diminish in the months ahead. We will see. These are all issues that go to make up the way markets are behaving and the way investment decisions are made. So we're traveling, hopefully, if a little bit warily at the moment. So looking at the major movers in the portfolios last month, the US had a return to form, and particularly US technology shares. That's after a few months where they had disappointed, I suppose, relative to companies that were considered to be outright beneficiaries of reopening and recovery. But it's turned again, and the investments we've got in companies like Apple, Amazon, Microsoft, Adobe, AMD, right at the top of the performance table for the last month. Also in pharmaceuticals, Roche, Merck did very well for us. But those are just a few examples. Critically, the portfolio as a whole performed well. Diversification really paid off last month, whether that was geographically or by asset class. We made money in equities, fixed interest and alternatives. It was a real full court press. And that, I think, goes some way to explain the recent performance and also to justify the way in which we manage money on your behalf. And so to the future. There's always plenty to do. A month ago, I highlighted the importance of patience when it came to earning a long-term return. We will continue to have good periods and bad periods as the global economy reopens after the pandemic-induced recession of last year. It's bound to happen, but it's not a reason to avoid investment. That patience will be rewarded, and the statistics show that markets do, on balance, go up. Something like 74% of the time on an annual basis. It's impossible to say whether one particular year will be a good one or not when you start out on it, but the odds favour a good return. And that's because we're invested in the global economy, we're invested in the good companies that are open to us, and that is what drives long-term returns. irrespective of short-term volatility. So we're positioned at the moment for growth, but keeping a wary eye on the risks, because capital preservation is also important in terms of the mandate that we have. So that's it for this month. I hope that's been useful, and I look forward to reporting to you in a month's time. Thank you.